Hello, have a pleasant day. Today's class is accounting entries in the books of Transferee Company in case of amalgamation. I am Srikmati from Dr. Ambedkar Global Law Institute, Tirupati. Let us start with this entries. That has got two methods in case of amalgamation in the nature of merger, that is pooling of interest method, and next in case of amalgamation in the nature of purchase. So the entries in transferee company, we are going to do it for two different methods separately. So the specimen journal entries as follows. So in case of amalgamation is in the nature of merger, that is pooling of interest method. So on amalgamation of the business, so business purchases accounted debtor, the amount of consideration to the liquidator of transferor company. And when the assets and liabilities as well as reserves are taken over from the transferor company and to be incorporated, that is joined or merged with that companies, then the journal entries are sundry assets accounted debtor with the value of book, and then two sundry liabilities. We have to take it everything, and individually we have to take it, okay, with that book value. Then profit and loss account, anything is there, then reserves with the book value, and then business purchases with the consideration. So this is about the journal entries for incorporation of assets and liabilities. And when consideration is satisfied, then liquidator of transferor company account debtor with the purchase consideration, and then to equity share capital. This has been issued by the transferee company. So that goes to equity share capital account with the paid up value of shares which is allotted. And to preference share capital. Suppose in the form of preference means then the preference share capital account. Suppose it has been paid with cash, then to bank account. On discharge of liability, the debentures of transferor company by the transferee company directly by allotment of its own debentures, then debentures in transferor company account debtor to debentures with the fully paid up value. And then if liquidation expenses of the company has borne by the transferee company, that should be adjusted against the profit and loss account. Profit and loss account to debtor to bank account. And then for formation expenses, preliminary expenses account to debtor to bank account. And this is in case of amalgamation in the nature of purchase. So on acquisition of business from the transferor company, so business purchases account debtor to liquidator of transferor company. So when the assets and liabilities are taken over, then sundry assets with their values, revalued figures. Suppose a company may have their own values and figures in their balance sheet, but the values which the transferee company takes, that value should be taken here. Otherwise, if nothing has given, then take it as book value. And then to sundry liabilities account, if possible, write it individually, otherwise take it total. With the figures, they are taken over. And then to business purchases account. And here you have to note that if debit total is greater than the credit total, that is, we have to take the difference between the assets and liabilities and the purchase consideration taken, and then the difference should be either given to that goodwill account or capital reserve account. So the credit total is greater than the debit total, then the difference should be debited to goodwill account. And when the consideration is satisfied, the liquidator of transferor company account debtor with the amount of consideration to preference share capital or to equity share capital to debentures or to bank. So whatever the case may be, it should be taken out. And then the shares or debentures may be allotted at a premium or at a discount also. So in order to get the advantages of provision of some statute, it is necessary to retain the identity of statutory reserves. But for this entry is not for the BCom or BCom LLB students. So the adjustment is amalgamation adjustment account to debtor with the amount of statutory reserve to statutory reserve account. After the period is over, then the reverse entry can be done it. And if liquidation expenses of transferor company borne by the transferee company, then same should be taken to goodwill account. Goodwill account debtor to bank account. And formation expenses, preliminary expenses account debtor to bank account. And if both the goodwill and capital reserve the goodwill may be written off against the capital reserve. If both the values are there, goodwill account as well as capital reserve, then goodwill may be written off against the capital reserve. So capital reserve account to debtor with the amount written off and then to goodwill account. So either goodwill account or capital reserve account, whichever is greater will appear in the balance sheet. And if any of liability is discharged by the transferee company, then that respective liability account to debtor to share capital account, to debentures account, to bank account. In case of fresh issue, that is to meet the requirements of the newly formed business, the cash may be required. In such a case, the fresh issue may be done for shares or debentures to raise further capital. Then the bank account to debtor with the money received on application to share application and allotment. Suppose debentures means debenture application and allotment account. Then transferring this application and allotment to capital, share application account and allotment account to debtor, then debenture application and allotment account to debtor to share capital to debentures account. Hope you understood. Stay tuned until the next. It's bye from Srimati. Thank you.